In a remarkable development, Apple has announced its entry into the banking sector by offering a high-yield savings account with an annual interest rate of 4.15%. This is a significant departure from the average 0.35% per year offered by traditional banks. The intersection of technology and the banking crisis has led people to question the current system, particularly as traditional banks have long provided near-zero interest rates. As the demand for digital banking grows and user experience becomes paramount, Apple's entrance into the banking industry has the potential to reshape the financial landscape. Traditional banks have struggled to maintain customer satisfaction, with savings rates at some of the largest banks in the United States remaining stubbornly low. When questioned about these low rates, many banks claim to provide a better user experience. However, with Apple, the world leader in creating seamless user experiences, now offering a high-interest savings account, the status quo is undoubtedly challenged. Apple's foray into the banking sector is particularly timely, given the rapidly rising demand for digital banking services. It is estimated that by 2025, over 80% of bank users will utilize digital banking, a trend accelerated by the pandemic. This positions Apple and other tech giants to capitalize on a rapidly changing market. Younger bankers are much less likely to view in-person banking as important. A significant generational divide is evident, with 58% of people over 50 considering local branches important compared to just 48% of those under 30. Moreover, a mere 4.8% of individuals aged 25 to 34 primarily use in-person banking services, compared to 30.5% of those aged 65 and older. This highlights the growing importance of digital banking for the younger generation. Traditional banks face a struggle to maintain deposits due to factors such as rising interest rates, high inflation, and changing consumer preferences. The entry of tech giants like Apple into the banking sector intensifies the competition, luring customers away from traditional banks with high-interest savings accounts and seamless user experiences. As a result, banks must adapt and innovate to remain competitive, revisiting their business models, enhancing digital offerings, and exploring alternative revenue streams. Failure to do so may lead to decreased profitability, reduced liquidity, and a weakening of financial stability. We described more about the deposit crisis in this video. Apple is well positioned to capitalize on these trends and cater to the needs of a changing banking demographic. With over 2 billion active Apple devices in use, the company has a vast network and engineering expertise to create a seamless user experience for its customers. By offering a high-interest savings account, Apple can attract customers dissatisfied with the meager returns provided by traditional banks. The convergence of technology and banking is poised to disrupt the financial industry forever. As Apple enters the banking sector, it brings with it a high-yield savings account and a reputation for creating unparalleled user experiences. Coupled with the growing demand for digital banking and shifting consumer preferences, Apple has the potential to reshape the banking system and force traditional banks to adapt or be left behind. The future of banking lies in the hands of tech giants like Apple, who are ready to cater to the evolving needs of their customers.